Hey guys, this is Daniel Kowall.
And I'm Tali Kowall.
And we're with Kowall Boutique Real Estate and EXP Realty. We're professional realtors in the City of Calgary, and we're going to bring you the September 2022 residential real estate market update.
Is the Calgary residential real estate market in a recession? Watch till the end to find out. And if you like our video, make sure to like, comment, and subscribe. We hope you enjoy.
All right guys, so let's get into it. The Calgary Real Estate Board just released the September 2022 market report, and they titled it Demand Shifting to More Affordable Options. So let's dive into this. What does this mean? When we look at the market from a demand side, we have to understand what is driving consumers to make particular purchases. In this case, the September report is alluding to consumers purchasing properties primarily in the affordable segment. So what is affordable housing? When we say affordable housing, generally the most affordable segment is the apartment segment, followed closely by the row segment, then semi-detached and attached as we get up to higher price points. So when we see an influx in demand in the affordable segment, this primarily refers to row and apartment properties under the $400,000 price point. So what is driving demand in the affordable segment? Well, actually three main factors: rising interest rates, migration to Alberta and Calgary, and rising rental rates. We've seen a drastic change in interest rates over the last 2 years. In March 2020, the Bank of Canada overnight interest rate was 2.45%. This allowed a boom in the market and increased the affordability, as well as increased the purchase price when average consumers were buying properties in Canada. Fast forward to today, and we set an overnight rate at 5.45%, which actually historically is pretty average and definitely not high. However, when we look at the change in interest rates over a mere 2 years, we see a 3% increase in interest rates. And this can have a drastic effect for consumers as it affects their purchasing power, desire to purchase, and affordability.
In terms of migration, we saw about 37,000 people move to Alberta. This is 87% higher than the year prior. So what does that mean? All these people moving to Alberta will need a place to live. We are also seeing a boom in the rental market, also primarily due to migration and high interest rates. In fact, the average rental prices have now eclipsed the pre-pandemic levels. The Calgary average rent for all property types, as shown on rental.ca, was $1,770 in September, which is up 24% year over year. National rents have now risen 21.9% since hitting an all-time low in April 2021 of $1,676. The average national rent is about $100 more than the pre-pandemic rate in the fall of 2019. More specifically, a two-bedroom place in Calgary has an average rent of $1,895. That is a 21.9% increase year over year, and a 0.3% monthly increase. While a one-bedroom has an average rent of $1,629. That is a 29% increase year over year, and a 2% monthly increase. We've also found the more desirable an area, the higher above these averages and medians that they're collecting in rent. More clients are now comparing buying versus renting as the rates continue to rise. All of these factors have been contributing to the demand in the affordable market segment. We have found that in the affordable segment, houses are still selling within 2 to 3 days, and in many situations, there has still been bidding wars, multiple offers. This, of course, will vary depending on neighborhoods and property types. So how is all of this translating into pricing and inventory in the affordable market segment? In the apartment segment, sales continue to rise. With 450 sales in September, that month has outperformed every single month last year, with a year-to-date sales in this segment of 5,026. The apartment condominium segment prices are sitting at 11% higher than last year. Similarly to the apartment segment, row properties are seeing lower listing levels and high sales activity, resulting in overall lower inventory. Prices in this segment are sitting 15% higher than this time last year.
Now, what is going on in the detached and semi-detached segments? Detached homes have seen a slow in sales for the 6th consecutive month. In fact, at 971 properties sold in September, it was the lowest sales since January 2021. This is resulting in consistent inventory levels and giving buyers plenty of choice in the market right now. The consistent supply and limited demand is slowly pushing prices down in the detached segment to a benchmark price of $628,000. However, it is important to note that prices are still at historically high levels, and we have not lost the price gains that we have built up during the pandemic. In fact, prices are still up about 13% in this segment compared to September last year. It is also interesting to note that different price points are seeing much different traction depending on where you are in the market. For example, we have seen a significant reduction in supply in the $500,000 and under market. So there are few options for buyers in this price range. This segment is still very tight and very much a seller's market. In contrast, detached sales in the $600,000 to just under $1 million segment are continuing to improve. This group has the largest growth in new listings and overall supply levels, and is trending towards a buyer's market. The semi-detached, also known as the half-duplex segment, has seen the lowest sales since December 2021. However, days on market are still at historically low levels at 37 days on market, which is keeping conditions relatively tight in this segment. Benchmark pricing in the semi-detached segment is still at $562,400, which is actually still up about 10% from a year ago. But we are seeing a downward trend in pricing in this segment. And inventory levels are still below long-term trends at 381 units in September. So what do all these stats, stories, different segments mean to you? Well, it can mean a few things. So to bring on our conclusion, let's talk about sellers. If you're thinking of selling a property in this market, it's important to be aware of what segment your property fits in, as there's a differential in demand per segment. So your skilled professional realtor has to be able to apply different strategies per price point and per segment that your property you're selling is in. So allow your professional realtor to offer guidance and allow them to lead with their strategies on how they think they can effectively market your property in the current segment that it's in. It's also important to manage and understand expectations in this current market. So you have to be realistic in terms of pricing your property as well as how long it's going to sit on the market, because the days of listing your property, selling it within 2 days with multiple offers are over, at least for the majority of the market. So if you're a buyer in this current market, well, there are plenty of opportunities for the savvy buyer and the savvy investor. Everything is on sale right now. There are fantastic opportunities to start your real estate portfolio or grow your existing portfolio, as well as buying properties at a discounted sale price. You can definitely buy at a lower price, and with the rental prices up right now, you can maximize on rental incomes as well. So if you're unsure where to go or how to get into investment properties, feel free to reach out to our team, because there are several different strategies that can suit on how you want to build your portfolio. And we can go over those strategies with you on a step-by-step basis so you can understand how to properly build wealth and build your investment portfolio, because this is a great time. There's so many opportunities in the market right now to buy. So that wraps up our market report. Thanks for watching. Be sure to like, comment, and subscribe if you liked the video, and feel free to reach out anytime if you have any questions at all on the Calgary residential real estate market, investing, or where to go with your property. Also, feel free to check out our other social media platforms where we offer regular tips and updates on the market, and you can check them out here. Thanks for watching.